Well, hello again and happy Friday. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is the 26th of June, 2020, and thanks for joining us for Friday Insights. We have some topics to discuss today, a lot of market movement, and a lot of things that are moving the market. So let's get into it and talk about that. Today we have another audio-only edition to Friday Insights, so thanks for listening today. We believe at Blanke Schein Wealth Management that information is power, and our goal is to provide our clients, friends, and family with real-time and relevant market-related information. And our process creates smart and purposeful financial decisions that improve your life, your family, and the community you care so much about. So let's go into the topics that are moving Wall Street today. My first topic of the day, weighing very heavily, negatively speaking, on the markets trading today. Even though it's good news that the banks have passed the stress tests and actually received positive comments, generally positive from regulators, there's two components that, if you look at the stress tests themselves, actually weighing negatively. One is the positive aspect, which is the Dodd-Frank Act stress test, where they look at the bank's balance sheets and they're subject to adverse conditions, and regulators decide whether the capital ratios are sufficient given the key losses. And 34 of the nation's largest banks, all the most important financial institutions, underwent this test, and all banks passed. And the comments, again, were generally positive, which is a very, I mean, if you think about it, the post 2008, 2009 period in our history, if we didn't have that in place, and go through that and have all of the regulations where the excess reserves that the banking sector had to put in place as a result of the crisis that we went through back then, they've been saving for a decade for the next, if you will, big crisis. And who knew that we would have it in 2020, less than a decade away, if you will, once again. And if we didn't have sort of those provisions in place and that savings of additional capital on the balance sheet for the banks in place, I don't know if the banking system could have survived in the 2020, going forward in this pandemic. But the good news is they had that excess reserve as a result of the Dodd-Frank Act, and the balance sheets are strong. In fact, the strongest they've ever been in banking history. So that's good to see. However, what's really negatively weighing on the markets is the second component, and that's the comprehensive asset analyst and review that they put them through. And what that means is the banks are subject to their capital plans, their buyback stock plans, their dividend policy, their acquisitions. Now, regulators could either approve or reject the financial institution's plan. And normally, the approval status the banks go through will be released on Monday. So we have over the weekend to actually get those plans. But the banks will also need to submit additional capital plan later this year. So they're going to request additional homework, if you will, because we don't know how far this COVID-19 reaches within the economy. And again, keeping the banking system intact and financially solid and stable is vital to the United States, as we all know. So the Fed has also imposed a blanket rule that the banks may not pay out the dividends which exceed an average of the last four-quarter earnings. And then they also said that stock buybacks are now expressly prohibited. So this sector, which has already been beaten down this year, got hit with a huge regulatory whammy this morning, and that's where we're seeing the financials sell off. And yesterday financials did extremely well in the trading day in anticipation of passing with flying colors the stress tests, of which they did. But then they got hit with this additional rule where they can't buy back stock. That's going to weigh on the future forward performance of this sector itself. So that's where we've got stocks feeling the brunt of this right now. And while we had good news, the good news turned to ultimately bad news because it's going to hinder future appreciation on the financial sector. So that's the update on that. The second topic that's moving the markets today, the coronavirus, hotspots that are popping up. Dr. Fauci and the presidential team today gave an update from the White House as it relates to this. This is significant because we haven't heard from them in this capacity in over at least a couple of weeks now. So they reassembled and got on TV today and basically gave us a live update that there are hotspots in some states. Now, 34 states have been able to reopen, and they're doing it mindfully in the sense that as of this moment, there's not a resurgence in cases in those states. But there are a minority group of handful of states, the Arizona, Texas, and Florida, that we're seeing some resurgence of cases. And as Dr. Fauci indicated, while it's only 3% of the counties across the United States that are experiencing hotspots, which means 97% of the counties around the United States are actually in good standing. And he also did say that the medical capabilities have grown exponentially to handle this. So from the therapeutics and the way the medical community deals with this, I think there's a lot more to be at least more confident, because we have the data, and the doctors and nurses and hospitals have a lot more equipment that is in place to handle this resurgence in hotspots. Nevertheless, the hotspots are important to watch, because as we know about this virus, it could spread exponentially. And I think that's the fear that we're seeing, sort of a reopening of America, which is reopening the economy, but then stubbing our toe along the way, and some future fears that what kind of long-term economic impacts that could actually happen. So we want to watch this next couple of days and weeks, if you will, to see how this actually plays out. And hopefully these are just spots that can be contained, and therefore they don't get out of hand. Therefore, we can continue to be thoughtful about our reopening process. That's what's spooking the market today, but that's something to be continually on our radar and paying attention to, because it matters to our portfolios. My final topic I'm going to spend a short time about, but we're going to continue to talk about this in future broadcasts, which is our next 6-month portfolio positioning. The next 6 months, if you think about it, obviously there's tremendous uncertainty on the economy, on the consumer. 2/3 of the economy is the consumer, so that's going to impact corporate earnings, but also positioning within markets and sectors. And we like to break it down, because there's always a bull market somewhere, and there's always a way to allocate capital and manage portfolios, both in the fixed income markets as well as the equity markets and everywhere market in between, when you have this heightened volatility, when you have this heightened uncertainty. In fact, that's where our clients make the most money. They just don't even know it yet, because it doesn't feel like it, because you're going through a lot of uncertainty. But most likely we also have from a positioning standpoint, we have to take into a consideration, which is the elections. We're going to talk about special election updates, and we're working right now internally with an investment committee at Blanke, Schein Wealth Management, and we're positioning portfolios with short lists that say, what does a Trump re-election presidency look like, as well as what does a Biden presidency bid look like there. And just like we did this in 2016, where there's a lot of unknowns there, we did this with Clinton and Trump. And we had portfolios positioned that would, have a hybrid approach and do very well. There are sectors of the economy that will do really well regardless of who actually gets reelected. There are some sectors of the economy that won't do so well, depending upon what side of the political aisle gets elected. And then another question is, will we have a blue wave, or will it be divided Congress? That also impacts portfolios and portfolio management going forward. So we're working hard on this. We're going to have more to report on a go-forward basis as we get prepared for the next 6 months in portfolio positioning. But as of right now, today is Friday, and we want to say have a great weekend, and looking forward to our second half reviews with everyone. We're going to be doing that pretty shortly as we come close to concluding our 6 months of first 2020. But thanks again for listening. Like and subscribe and share with your friends and family. Take care. Have a great weekend.